stage is set, all engines go. Welcome to the angle. Let's start the show. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Atomcash, and I'm bringing you the firepower that your life may have been missing. Now, whether you are new to trading or a trading savant, I aim to turn complexity into clarity with a shot of adrenaline. That was a little I'm a little over the top this morning. I'm sorry. I had a lot of caffeine, had a good workout. We're feeling good today. We're doing good. We're in a good mood. Everything's good. But we got a lineup of exhilarating segments for you guys to keep you all well informed, give you as much information as quickly as possible, as per usual. Now, starting off the show, we're going to go through our live trading and market analysis. So we typically do that between now and about 10 o'clock or so. And then we're bringing back an old segment called Options Operation. I have two questions that have been submitted. So essentially, this is more of like a risk on, risk off kind of questionnaire segment where you guys submit your questions in our Discord community or also on live. I've got two questions. I have room for one more. So if you guys have any questions, whether it's specifically to an options trade or anything really about the market, but mostly we're looking at like risk conversation here, please feel free to drop it in the chat and I will be more than happy to consider it. Like I said, I got room for one more. We typically do 3 questions for that segment, but a lot of good information will come out of that, I believe. Now, going to do a quick flex/gloat. If you follow me on X, we talked, and if you watched the show yesterday, we talked about SoundHound and how bullish I was yesterday. And at the time, it was trading at 1090-ish. And I was talking about how the daily chart looked awesome, the weekly chart looked awesome, it's a good company, blah, 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 blah. And right now, it is gapped up about 7% after closing up 2% after I talked about it. So not that I have the power to move a $5 billion company, but hey, it's pretty cool. So good day there. And also, I personally alerted some $12 calls in our Discord community. That's on top of my other longer term position shares and leaps. So you might see me handle those right at market open just to make sure our members in our community are taken care of. And if you have any interest in checking our community, feel free to check out any of the links in my bios. We have a Discord community, myself, exclusive trading, and Grumps. We all run a fantastic community full of expert knowledge, expert traders, and if you're not in, you are missing out. And if you look around, there's a promo code hidden somewhere. I might have reposted it. So if you want a promo code, save a few shekels to try it out, it's out there. So take a look. Anyway, let's get into the market today. Opening pretty flat. Now, yesterday we actually saw a pretty interesting day, and by interesting, I mean boring. we had, let's zoom out here. Let's go to yesterday. We kind of just had a grind down. Now, while we were live on the show, the market really wasn't doing too much. These are 5-minute candles, and we kind of closed out the day at the lows, and I was like, if the lows break, we might go a little bit lower kind of thing, and that ended up happening. We tapped this LOI right here on my chart, that's 619.22, which I don't know if I brought up yesterday, but this has been a key level. You saw that tap right here at 12.25, got a quick bounce there, and then you had a confirmed break there around 2 o'clock, recovered it before the close though, so that's good to see if you're a bull. Now, fast forward to today, we are looking like we're going to open up above that LOI. So you're going to want to keep that line on your chart today. It's going to be a very important level. That's 619.22. Keep that on your chart if you are trading SPY or if you have any interest in just watching the overall market for the day. Now, if that 619.22 level breaks, I believe we have 616.17. So you could pull a little bit lower. Now, if you watched the show yesterday, I mentioned how I was very excited on the longer term prospect of a bullish market. However, I would prefer for us to get back down to around that 613 level first, that 613.23 area, specifically the old all-time high, before building out a long position to push for another leg up. Will I get it? We will see. But we got a few levels of support to go through first, if that is to happen. Again, not saying I'm bearish by any means. In fact, we're up on the pre-market here in general, which is a good sign. But just something to keep in the back of your head if you're someone who's looking to open up more longer-term positioning. I'm personally waiting for about a $7 pullback here on the overall market, let things cool off a bit, build a base, and then go. So that's kind of what I'm personally looking at here. Well, let's get into our Catalyst Watch real quick, get an idea of what is going on in the market today, and if there's anything that you should look out for. Now, yesterday we did our segment on the week ahead, which gave you everything to look out for the week at that point in time. Now, obviously, things change every single day. We get new information, new things happen, so we need to know what's going to happen if things change. That's why we always do our Catalyst Watch every single day when we do the show live. That way you guys are mentally prepared for certain times in the day where something could happen and you're not caught going, oh, what was that? And the market pumps or dumps or whatever happens. At least you're aware there could be a news catalyst and you're aware of what that catalyst is so you can prepare effectively. Without that, you are flying blind, in my opinion. So always have some sort of news aggregate. Personally, I use Financial Juice. I'm not sponsored or whatever, but they're pretty solid. They even color code it for you on certain things. I disagree with some of the color coding, but they color code it for you, which makes it a little easier if you want to take that into consideration. Now, what I've noticed that has been added to the docket today is a Trump cabinet meeting at 11 o'clock. So something could come after that if he decides to speak before or after. So around 11 o'clock, keep an eye on that. You also have the New York Fed inflation expectations at the same time. That can affect the market. So around that 11 o'clock window, and that is that midday lunchtime, or at least the start of the midday lunchtime, you're going to want to at least be a little trepidatious around that time in case we do see some sort of pump or dump at that point on arguably and more than likely predictably lower volume. Also, you have consumer credit today at 2 p.m. So, I'm sorry, 3 p.m. That more than likely will have an effect on the market, and that's right in power hour, so keep an eye on that. That could give you a trend into the close either which way. Outside of that, not really anything to report, and we will obviously have a show tomorrow at 9:15, so if you don't know, make sure you jot that down. We'll be here again tomorrow at 9:15. We have the tariff deadline, the original tariff deadline. Now, again, things have been moving around that, we're extending the deadline, whatnot. Maybe keep it in the back of your head if you're swinging anything, that things could change, certain things could be impacted, whatever, because this is the original deadline tomorrow. So I'm not saying anything good or bad will come from it. It's just a matter of when you're looking at risk, at least be conscientious that this was the original deadline and it seems like it's been pushed out. But who knows, maybe Trump goes, let's roll it back to making it tomorrow at market close today, or he finishes this meeting and goes, actually, we're going to make the deadline tomorrow because I'm not a taco or whatever, right? So, anything can happen. So just stick that in the back of your head if you're swinging any positions, especially short-term options, overnight tonight. Now, 5 minutes till the market opens. Guys, I asked you this twice a stream. I'm going to ask you once now. I'm going to ask you once again later. But please do me a quick favor if you're watching, wherever you're watching on X, YouTube, or Instagram, do me a favor and interact with the stream. Drop a like, drop a comment, subscribe, follow me, whatever. If you don't know, once we get the YouTube over 500 subscribers, I will be doing this on the daily at 9:15. So if you enjoy the show and you're not subscribed, pop over there, make an account if you haven't already, and subscribe over on YouTube. I would greatly appreciate your support. I know you can keep your eyes and your ears anywhere else. You can watch any other stream or any other space or whatever you're doing, and I appreciate you spending your time with me and helping me grow our little community right here on this channel, or multiple channels, areas, whatever. Anyway, let's roll into the rest of the market here. Q's marginally up about 0.26%, and IWM leading the pack, which yesterday actually saw a little bit more bearishness. So that's interesting to see. Leading the pack right now, up 0.46%. Check out our sectors real quick before market open. Pretty overall, I was going to say pretty red, but actually it's more of a mixed bag. Tech leading the way here, plus, actually I lied. Industrial's leading the way with tech right behind it. And consumer discretionary up a little bit too, which probably makes sense. Without looking, I'm assuming Tesla has moved up a little bit. Utilities red, energy red, and consumer staples red. So our defensive areas are a little red. Tech is green. So hinting that could be risk on today. We will see. Real estate flat, materials flat, industrials, like I said, up a little bit. Healthcare pretty flat. Finance is down a little bit. So a bit of a mixed bag into the open here. Looking like we're going to tilt more risk on, but we'll see, especially after yesterday. Getting a little bit of buy the dip kind of environment makes sense, I think. And again, what I would like to see is more of a dip before it's bought. But hey, we could get moving sooner than later, and I wouldn't be mad at that. But to be realistic here, again, we had 1, 2, 3, 4, 5, 6, 7 green days in a row on the SPY, and had one red day where we almost wicked that 8 EMA here. Pretty close. And closed higher, so could be a good sign for the bulls here. We'll see if that 619 LOI gets held today, or if we pull a little bit lower. So that is to be seen for now. Volatility, let's look at UVXY, is down a little bit here before the open, so that's a good sign if you're a bull typically. And then we'll pop through our Mag 6 here. We got 2 minutes till the market open. TD Burn says he's ready to roll. Let's go. NVIDIA down a little bit here in the open. Like I said, excuse me if I'm a little bombastic today. I had a little bit too much caffeine. I had a really solid workout, so I'm a little jazzed up today. About a triple bottom here on NVIDIA right around the open. Now, this isn't your pre-market low, but at least this localized low of basically from 8 to now. So keep an eye on that. Microsoft, a little bit of a hard sell there and bought back up, but really no motion there. Google, a little bit of a quick pump here into the open. Apple pretty flat, Amazon pretty flat. You got Prime Day, so watch that. Could have some sort of a catalyst there. It seems very lackluster. And look, I was right. Tesla is up about 1%. It's even higher in pre-market, so that's going to be where your consumer discretionary. Actually, watch consumer discretionary a lot today because you have Tesla and Amazon. Tesla's been beat down, so you might get a little bit of a bounce back rally, and Amazon's got Prime Day. So if sales are looking good and they report early results for whatever reason, hey, we already sold X amount of dollars and it's the first day of Prime Day. You know, that could give you a little bit of a pump there on Amazon as well. So consumer discretionary, you might want to keep an eye on today. That sector might get a little bit of bullish, or you could have a bear argument there with, again, Tesla. I'm not bullish on. I think it's going to pull much lower. So in general, Tesla going down, especially if there's any drama there between Elon and Trump. And Amazon, the inverse. Things seem lackluster. The sales kind of whatever. People are not responding well on social media. That will be a detriment. Okay, we got about 15 seconds here. Guys, I'm going to be a little bit quiet here right into the open because I do have these $12 calls for SoundHound open, and I will take a little bit of profit here, so I do want to alert that exit for our community members over at Exclusive Trading. So hang on real tight. Also, I got to make a little money here. Alrighty. So let's take a few more. Okay. Okay. Here's me trimming over and over again and again. And again. Oh, this is great. Man, we're just moving here on SoundHound. And again. And again. All right, that is, I'll stop there for now. Trimming sound, that would be a 103% gain. So if you were in our Discord community, I alerted that call at 52 to 53 cents. Currently trading around 107-ish. I fired off trims between like whatever it was, 0.8 and $1, $6, $7. Oh my goodness, Soundhound is going here. That's pretty solid. If you are in Soundhound, what you want to look for here is this 1371. You're going to watch 1265. That localized high there is going to be an area of resistance. But you're in the gap right now. Look, even on the level 2, 200K parked there at 1265. Huh. Conspiracy? I think not. But you have a big block there. Obviously, that localized high. If that breaks, you're going to tap 1371 today. Very excited about that. 1371's next price target. Past that, the gap fill is at 1399. So Soundhound could have a crazy little push here. And it has officially broken the localized high. Wow. I'm going to trim a little bit more here because that's going to be a key spot of resistance. 138% gain. Magnifique. Solid. Solid. All right. I'll pop back to that later. I got a show to do. Had to make my money, though, so sorry, guys, that was a little boring. But if you followed along the show yesterday, you had an equal opportunity to make Soundhound money as well. So this 1265 area is going to be an area of resistance. It might just power through it and say F it. It should be fine. But like I said, the next spot to watch, I would personally watch it to come back down, back test that 1265, bounce, and then between 1371 and 1399, that gap fill, that's where I'm going to look for my next take profit. So what I'll do here while I'm doing the show, I will make an alert. There we go. So that way it'll ping me while I'm talking here if it just blows it out of the water. Anyway, actually, real quick, drop a 1 in the chat if you ended up making some money on Soundhound. That was a solid. I'm very happy about that. The timing was fantastic. Drop a 1 or drop a 2 if you didn't because you were burned before, and I know one of you didn't love it, and that's okay. But let me put it this way. I don't share things on this program if I'm not, and I don't share things in our community either if I don't feel a certain way, or at least give you guys the risk to reward specifically. If there's anything that's even slightly like, I don't talk about it because, you know, I get nothing out of you making money, but if I say something and you lose money on it, then you just hate me. So it's really a lose-lose position. So I'm very careful with what I say. Anyway, market's open. SPY back tested that red to green flip. Right now we're kind of just sitting down here, 0.04% on the SPY. Not much to see. Q's dumping here back to the 552.80 LOI, which is right around your red to green flip. It's about 80 cents higher. So watch this area right here on SPY. IWM is looking like the strength at the moment here. So we'll keep an eye on IWM right now. VVIX, I don't know why my VVIX and VIX take like 10 minutes into the open to update, but we'll check VVIX and VIX in a little bit here. UVXY flat at the open here. NVIDIA pretty flat. Microsoft pretty flat. Google had that pre-market little baby pump there in the first 2-3 minutes here. Now selling off a little bit. Ooh, is that big? I can't tell. Yeah, about $1 drop here on Apple. Amazon selling a little bit. Tesla inverse Amazon essentially right now. Basically have two, they basically look opposite each other. So that's interesting to see. On the Prime Day stuff, I don't typically buy Tesla. Or Amazon. I don't really mess with it in general. I think a lot of retail investors think it's a baked-in bullish catalyst. I don't think so. I think it's a time in which the market's going to look to sell to you. But I will say, and I mentioned it on yesterday's program, you do have a potential flat top breakout here on Amazon forming. So if you break that 224.29, which you're about $2 under, but if you break that not $2, about $1, I guess say 224.29, you could get it up to what did I say yesterday, like about $4 there, 228. So you could have a nice little pop here on Amazon, but it's got to break that level first. So I'd watch that if you want a good day trade and you want to play that Prime Day news stuff. That's what I'd look for. That's where the opportunity is. I would wait or set an alert north of that 224.29. Watch volume there. If the volume checks out, that level breaks, it looks good. You probably got a 4-point rally there on Amazon. For me, my risk profile, I probably won't take it because it's not something that I just don't like that kind of trade. But like I tell you from a technical standpoint, is if that level breaks, you're going to have probably a $4 pop. But again, you have that news floating around, so that could help or hinder you. So take that with a grain of salt. Popping back to the market here, still flat on the day. Let's check out our sector, see if anything has changed. And then we'll zoom around, see if there's some opportunity to potentially make a trade or two. And then, like I said, around 9:45, 10 o'clock, we got our options operations segment. So that's going to be a segment really based on risk and how I've got 2 submitted questions. Again, if you want to submit a question in the chat, feel free to do so. But basically, it's all about risk. You guys submit your questions. I talk about how either you can manage a specific trade without giving you specific financial advice, or what to look at if you're looking for help or something from a psychological point of view. Not that you're insane, but I mean trading. Some sort of psychological help with trading, or some sort of like how to manage a position, those kind of questions. That's exactly what we're looking for on options operation. So like I said, I do have room for one more spot. So if you do have a question, feel free to drop it in the chat. If it's a good question, we'll bring it up. Looking here at the open here, energy getting a nice little move here. Ironically, staples moving down and utilities getting slammed down 1.6%. Super mixed bag on our defensive sectors here. Overall bearish on the defensive sectors, and tech is kind of going nowhere. So this is looking pretty mixed. Yesterday was looking mixed as well. We said that at the open. Yesterday was looking pretty mixed. It broke that level to the downside and it sold off slowly. Today's looking like that. Anytime you see, if you add all these sectors, if you haven't already, make a watch list on your brokerage, add all these sectors. This is basically everything that makes up the SPY. And then anytime it looks like a Christmas tree, red and green, risk off, typically. With the exception of grouping these 3 at the top together, XLU, XLE, and XLP, those again are your like defensive typically. These can be red, all the other ones can be green. But when you get red, green, red, green, red, green, and again, percentages matter, typically a sign to be a little more careful because there's indecision in the market generally, unless there's a specific catalyst for why a certain sector may be green. Maybe a big heavyweight in the sector had a horrible news or had fantastic news, conversely. So you want to keep an eye on these throughout the day. As you see me on this program, we'll pop back and forth and check on things, kind of get an idea on how certain sectors could affect the market. But when it looks like this, you tend to want to be a little bit more careful in general. And as you can see, the SPY, just like yesterday, not really doing much. Pretty flat. And IWM is trying to lead the pack. Ironically, yesterday IWM was lagging, right? It was a little bit behind. And now it looks like the roles might have been reversed here a little bit with small caps trying to take up some of the brunt of the weight here after yesterday's red day. Watch that. Actually, we basically did what I said here. For those of you that watched the program last week, remember we talked about IWM. Remember we talked about this, as I called it, like a go level, that 219.34 break. And once that breaks, I said, ideally, I want to see 223.32, this line on my chart, tap, come back down to retest this 218.52 to 219.34, this cluster here, bounce and go. Yesterday, we wicked it, we closed above it, and now we're above it again. So if we see the next 2 to 3 days that the bounce and go part, then we should see a solid breakthrough 223.32 and potentially a hard small cap rally, at least in my opinion. So keep a strong eye. Maybe set an alert on your chart. 223.32. That is your... We're already past the go level, but that if that breaks, then small caps are going to take off. And if you don't believe me, these lines are stupid or whatever, go back and watch last week. I forgot what show it is on, so you're going to have to... No one's going to do this, but if you want to, the proof is there. Go back and look. That localized high is a penny off that level. 223.33. I predicted this before it happened, and I'm not saying I'm a trading god or anything. I'm just making a point of showing you how important these levels are, and they're already mapped out ahead in time. So these levels you need to put on your chart. 223.32. Put that on your chart, set an alert. If it breaks with some volume, you're more than likely going to get a hard push now, assuming this 218 to 52 and 219.34 in IWM holds. If that holds and 223.32 breaks, you are going to get a push through all of these resistance points, in my opinion. I'm very excited for that, as you can tell by my enthusiasm. Raz says, what trading platform is this on the screen? This is Webull. Not sponsored or anything. I know a lot of people like TradingView, they use TrendSpider, whatever, all these other programs. For what it's worth, Webull being free gives you a pretty loaded suite of tools to use. Doesn't have everything. It's pretty solid. I also have TradingView. Look, money's not the issue. I just have a hard time paying, and I don't like paying subscriptions. Like, it's just me. For those of you that have made a lot of money in the past, if you're someone who is ever broke or had no money, you'll value, like, you will make the stupidest decisions. You might buy a super expensive car, but for some reason, you'll have a hard time paying an extra 50 cents for an ice cream cone or something if the price went up or something like that, right? If you know, you know, and that's kind of what I feel about, like, paying for, like, TradingView or something, so I don't. When there's other alternatives like Webull, and it works great. So I like Webull. It works fantastic for my needs. Great charting platform. It's quick, and I like it. That's just me. You do you. SoundHound at the highs here. Keep an eye on that. If you're long, what a candle, baby. Oh, man. If that taps that 1371 today, I'm going to be a happy camper, and I'm not even looking at my account right now, but I know my leaps. I have $10, $11, and $12 leaps on SoundHound. And I think I have 14s as well. 14s or 15. I bought something a little further out the money. So I am going to be a happy camper when I check back later, I think. We'll see. NVIDIA selling off a little bit here. At the 200 MA on the 5-minute. What's a daily look like? Oops, didn't want to do that. It's about $2-3 off the highs. It's kind of consolidating here. Lower volume. Granted, we had a holiday. NVIDIA's interesting here. Interesting. I think I'm going to leave it alone for now, though. If you like the idea of trading NVIDIA today, bullish above the lows here at 158.55. You're risking about 20-30 cents on equity. I wouldn't hate that. But I'd keep a tight leash on, and it might be early. This could fail. So, not going to put my money where my mouth is because I don't love it. But it... See how I'm phrasing things very carefully so no one blames me for anything? I would lean 70-30 bullish on NVIDIA if it holds here. Good risk to reward. You're like risking about 20-30 cent drawdown. It's okay. Our options inflated. IV percentile 38. Yeah, IV's lower than it's usually, at least lately. We'll come back to it. I might trade NVIDIA. It might happen. Oh, there it is. Nope. Broke my risk already. And that's why I said I didn't put my money where my mouth is. You guys will see me on this program. I will put my money where my mouth is if I take a trade, and that already broke my risk. So we ain't doing it unless it builds a strong base here. But I'm not going to touch it for now. Spied a little bit of push up there. Really a quiet day, kind of like yesterday. Q's hovering around this LOI, that 552.80. I think this is going to be what you're going to want to watch today on tech. So if you're a tech investor, watch this 552.80 area because we're seeing, look at that, IWM, nice rally here. We're seeing the inverse of yesterday. So we're seeing tech lag and small caps rally, which is the inverse of yesterday where small caps were lagging and tech rallied. So, I mean, all things considered, rally, like comparatively rallied. It didn't rally. We had a red day. Well, I mean, there was more strength is what I should have said in tech versus your small caps. So I'd watch this. We could get a downside move here on tech so we might see what is called a divergence. Divergencing meaning one goes up, the other goes down, right? Ideally, you want a symbiotic relationship where all three indexes go up and volatility comes down. That's like my golden setup. Pretty simple. SPY goes up, Qs go up, IWM goes up, volatility's down. That means you're bullish and buy. However, we might be starting to see the cracks of tech going down and IWM going up, which is going to cause a divergence, meaning we're seeing small caps rally and we're seeing tech retreat a little bit, which can mean multitude of things. But I think we need a little bit more time before passing judgment just yet. It's only 9:45. The bulls are defending. You know, we had a failure here, but it recovered pretty quickly. We're trying to defend this 552.80. And you got the 200 MA on the 5-minute down there that caught it and bounced. So I would lean more bullish than bearish on the day as it sits right now, as SPY is making a new high in the day, which isn't saying much, but it is. I would lean more bullish than bearish, especially on small caps. This is your strength today. IWM is the strength today. Okay, VIX moved down, making a little bit of a bear flag here for those of you who like shapes, now that I have my updated VIX information. Gap down, grinding up a little bit. Let's see if we can get VIX down to 1653. That's where I'd look for a little bit of a volatility bounce. So between 1637 and 1653 is where I'd be looking for volatility. Get a little bit of a perk up here. Currently, we're under that by a good margin. So if we do see a nice little rally in the day, that'll be supported by volatility looking like it could draw lower. That thesis is going to be supported by a VVIX that's moving lower right now. It's a good sign, showing volatility is less volatile than it was perhaps yesterday. And also UVXY at the lows also supporting that thesis. So it's good to see volatility slowly starting to decay. Yeah, NVIDIA is iffy here. I want to be bullish here, but it is iffy. I like this wick though on the volume. All right, I might grab some. We'll keep wrist tight though. Oops. All right, I'm gonna long the 160s at 140. And we'll watch that carefully. Basically, what I'm risking here is this low. So we saw that low break again, but notice the volume, and we closed much higher. So it's looking like a liquidity sweep lower, pushed higher. We just broke that SAR as well on the 1 minute here. Your MACD starting to flip. RSI is a little beat down, but we could have a little bit of a momentum flip here. So that's what I'm watching right now. Again, that's the 160 calls on NVIDIA filled at 140. We'll keep it up here for you guys. Watch the POC here. So 159, is that 13? 159.13 for a reaction. Breaking over that. The 200 MA up here. This is simple stuff. You guys can put this on your chart too. 159.41, breaking that high a day. Now I'm going to crack open my not sponsored Polar Seltzer. Because Polar, it's the trader's choice. I'm going to be the first finance YouTuber to be sponsored by a seltzer company. Wait and see. That's the goal. Let's get them to send me a 12-pack. And again, it's not about the money, it's about the principle. All right, we're near that POC here on NVIDIA. Got about 10% here. I'm going to take a few off here on NVIDIA. 11%. And nothing crazy, nothing to write home about, but traded level to level, worked out great. Let's see if we break POC. If we reject POC, it's going to be my sign to put a stop loss on right away. Because we have to push through all of these EMAs and MAs. There's a lot of resistance here, but these are the kind of trades I like to buy because if and when the bulls do push through, you tend to get a nice relief rally to the upside. So although the risk to reward right now isn't fantastic, I mean, we have defined risk to reward where it could, I made a few shekels here, but if it comes back down, which this isn't a good sign, that's not a good candle just yet, but if it comes back down, I would allow it to backtest 158.78. If it breaks that, that'll be my cut point. Similar to Apple yesterday, for those of you who watched that Apple trade. We made a few shekels because the opportunity was better at that point in time for the bulls, but we keep that risk really, really, really tight because we're not fooling ourselves. We're not out of the woods by any means. We're playing a reversal trade. But when you get in on those lows in a reversal trade, they can make you a lot of money if you do it the right way. That entry matters just as much as that exit. Wow, Soundhound, $13. Let's go. What a beaut. Up 14% on the day. I am, needless to say, I'm very excited to check out my brokerage when the show's over. I'm quite excited. Alright, NVIDIA's farting around this POC here. So unless we break it on this candle, which we're trying, I'm going to want to put a stop on. If you have a smaller account, putting a stop loss at break even is fine also. Like, you can just do that. But with this wick here, I don't love it. Alright, I'm going to stop loss at break even. Just to de-risk a little bit. Just in case this fails. Because now we're seeing 3 wicks here. Or it could come back down. It could fail. And that's where we want to at least say, hey, I made a little bit of money and I'm not getting greedy and I stopped out, you know, save my shekels. And hopefully this is, Google doesn't have, or Google, Amazon, wow. YouTube's lag isn't long enough where you guys can still follow along. I try to say these things in advance so you can still do whatever you want to do on your end. So that 140 is my entry. I have a 140 stop loss right now. So we'll see if we get stopped or not. Good wick here. We just back tested basically what I said. I wanted to back test that 158.89 area. We got a little bit below it, but closed higher. That's a really good sign. So if there's a rally, which we're starting to get here, we're breaking that localized high. We're trying to break 159.10. If we can get over 159.10, we could see a nice rally at least to the 200 MA and then the high a day. And if the high a day breaks, we should have a hot rally on NVIDIA today, and these will go in the money. I am very confident. So make sure if you can have runners, leave runners. If this can break the 200 and this breaks high a day, which we're not saying, I'm saying it will go in the money. That's only 26 more cents. So, I mean, I'm not sounding like Nostradamus here. But there's a strong probability if we can at least get through the 200 MA that this will push to a new high a day and go in the money on NVIDIA. You do have the red star coming down here on the 5-minute as well. So a bit longer term support there on a harder rally if the bulls can really push it over this POC. Now, they're not having an easy time of doing it, but they're definitely trying. This could give you a sharp reversal here to the downside, though, because we're seeing a lot of consolidation around this POC, so make sure do not go without protection on this one. You want to have a stop loss at your entry on NVIDIA because this could get shut down pretty bad, pretty quick. So be very careful on that. Uh, 1.4. Here we go. Jeez, Soundhound. Please give me 13. What did I say? 1379? 1371 to 1399. Fill the gap today. Why not? Let all the people on X FOMO in. Let all the social media people pump it now. When you know that you watched this program yesterday and you got in before all those other fools out there. Everyone else is hot on Soundhound now. The posts on social media are flying, and guess what? You know before them. Here's your cheap plug. Only at exclusive trading. Really, this is a solid push, though, on Soundhound. I'm very happy, if you couldn't tell. But let's focus on the task at hand with NVIDIA here. This is a pretty scary looking move here. This could reject. I will continue to say this could reject. You could argue consolidation here around the POC before rallying harder. You could also argue bears are pushing it down. Look at these wicks. 1, 2, 3, 4, 5 wicks under the POC. So you could argue here that the bears could be pushing this down. This is why your entry really matters. Even though we back tested that area, that very, 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 very short-term area of support here with that 952 candle and moved back up, we also, on that next 1-minute candle, failed that breakout and pushed lower. So there's a tug of war here with NVIDIA. And if you don't have a stop loss on, you're going to have a bad time. Someone share the the South Park meme of the guy who says, if you pizza before you french fry, you're going to have a bad time. You will have a bad time without a stop loss. I promise you. Do not trade NVIDIA right now without a stop loss. If you got around that 140 area, you're safe. You have no regrets. You will not be losing money, and that's what matters at the end of the day. You make more money than you had yesterday. Sponsored by Polar. Not sponsored by Polar. If NVIDIA bulls were to break out, they break out in under like 3 minutes, in my opinion. Based on how this looks, it's got to go sooner than later. You might even just wick this candle here and reject 159.28. These are the kinds of trades I like. I love playing reversals. I love getting in when things are cheap, when they're dirt cheap, when they're seeing periods of weakness, whether it's a day trade or a swing trade, whether it's equity or options. That is like my bread and butter. I hate when things just go up directly or down directly because I hate riding trends unless I'm already in on the trend. If I'm not in on the trend, I hate trading those environments. But when we move as a parabola, right? That's why I like the SAR indicator so much. It functions on the parabolic nature of stocks. That's where I make the majority of my money, is that parabolic nature of the market. Buying the lows, selling the highs. That is where the money it can be made, in my opinion. TEX having a nice little day. If you caught the program yesterday, keep an eye on this one. Yesterday I offered you a discount, just saying. Kronos Group as well. Probably going to get a rejection here on Kron. Again, this is super long term. We talked about it yesterday, but if you like that idea, like I said, anywhere north of 150 to $2 is cheap in my opinion, long term. That's an investment. That's equity. We're not talking options. Oh, Nvidia making me look like paint's drying here. It's going to reject, I think. All right, I'm going to close out in profit here. So just because we have a stop loss on, it doesn't mean we wait for the stop loss to trigger. We don't lie to ourselves, right? We look at the trade, we go, it's spending too much time here. Bulls are not having enough oomph to push it to the upside. I filled at about $1.50. It was got some at 149, 150. So I still made $9 to $10 on my exit on some of those options, but I didn't wait to lose that $9 and $10, right? Sometimes it's worth that risk. In this scenario, to me, it's not worth that risk because it's looking like we're going to pull lower. You have your MACD curling over, your RSI. We didn't get enough bullish momentum here really to break out of here. This candle, it's not fantastic. You've got a green SAR here on the 1 minute. However, I would be interested if we came back and kind of double bottomed on the day, and maybe then I'd look for a re-entry. But otherwise, I don't really want to touch it, and that's okay. Man, Soundhound is squeezing shorts. I don't think I mentioned. I think this name is 30% shorted. It was short. So just so you guys know, I know a lot of people talk about short interest, short squeezes, etc. Two things. One, a company is typically shorted that heavy for a reason. Typically, the market does one or two things. Really hates that stock and thinks it's way overpriced. Or two, really hates that stock, thinks it's way overpriced and wants to get really cheap shares. So they short it, close their short, and then go long. Right? But then you play a game of chicken between all the other shorts and saying who's going to close first, who's going to flip long, right? So you play that game. But this is a really solid push on Soundhound. All right, guys, it's almost 10 o'clock. I will pop back to Nvidia to see how our trade would have went. In fact, I'll add this to our Atomcash Angle set list, watch list. We'll keep an eye on it up there. To see if the trade would have worked out or not, see if I was right, see if I took the right step. But either way, it's a victory. I made money. I said the risk to reward here wasn't matching anymore, and I left. That's it. Some people don't understand, and this is one thing before we roll into options operation. A 10% gain on a day trade is fantastic. You know how many times you sit there and wait on a swing or an equity trade for 10%? You might be waiting days, months, weeks. It doesn't matter. You might wait a very long time to make 10%. And you can make 10% on an options trade like that. And you can lose it like that as well, right? So don't ever minimize the gain that you can make with options. Greed will kill you. Greed will consistently kill you in this game. But if you learn to manage that one emotion and just make more money than lose money, you will continue to win. And I know that sounds dumb, make more money than lose money, but it means don't always keep looking for even more money. Because if you compound those gains over and over and over, even if it's just 10%, you're going to have more money to invest the next time. And then more money to invest the time after that. And then more money to invest the time after that. So that 10% on your $1,000, which is only, whatever, $100, when you have $10 million, that 10% is now $1 million. Right? So the more money you make, the smaller percent gain you need to make more money. And that's a really solid viewpoint, in my opinion, that you should consider for your trading. That was a crazy little move on NVIDIA there while I was just giving you a little bit of a risk management rant. Hard sell, big pump. Still not breaking, though. We'll come back and look at that. Anyway, we'll keep spying the screen here, which isn't much to look at, but we're going to roll into options operation. So again, guys, the point of options operation, you guys pitch me your questions. I have 2 that are submitted. I have room for 1 more, so if you have any questions about trading, a specific chart, or options trade, or any risk management questions, feel free to submit them in the chat. I will consider them because I'm looking to I can add 1 more question. So I like to do this for you guys. If you guys have the opportunity that you can drop a question in the chat and we'll see if we pick it up. Any question at all, I will try to answer it without giving you financial advice because I legally can't do that because I am not a financial advisor, but I can at least say what I would do in certain scenarios, right? And that hopefully can provide you some value with your trading. Now, for today, the first question on options operation is, I have a $150 call for NVIDIA that's expiring in January. How should I manage it? That's an interesting question. So this is an individual who has a $150 call on NVIDIA. So currently they're in the money by about $9, and they said January. So let's take a peek at that contract and go from there. Wow. All right. So this contract is trading at $25.65 looking at the bid side. So AKA $2,565 each. Pretty solid, and you got a lot of value there. Let's also look at the chain. Hold on, let me pop this up. Let's go over here. Let's pop it over here. Let's go back here. There we go. All right. Oops. There we go. All right. So on this specific chain, we have currently 42% IV. We talked about that yesterday. When you're deeper in the money, that IV could jump up more. Obviously, you have a lot of intrinsic value. Right now, you've got about $10 or $9 of intrinsic value. So as your options move in the money, they hold what's called intrinsic value. That means, let's just pretend, and if you don't know this information, A, very happy to share it with you, but B, spend more time focusing on understanding options. If you're trading options, you don't understand this. This is very important. If NVIDIA is trading at $159 like it is right now, and this is a $150 call, the amount of intrinsic value that contract has is $9. Because if NVIDIA, it stayed here at $159 all the way to January, and you get to January, those contracts are worth $9 each because it's the difference between the strike and the current valuation of the stock. It is worth $9. So at this point, at this time, you're looking at a 2x, 3x premium because it's $27. We'll call it 27 because that'll be 2x from your intrinsic value. So this is holding a time premium of roughly like $1,800, which is quite a lot. So the market's pricing in more movement here on NVIDIA theoretically, and in theory to the upside. That there's more extrinsic value here. It could make an even bigger move, and that's why this contract costs so much versus it being $9, which is its intrinsic value. You have a delta 66, so that's not bad. So that means for every dollar that NVIDIA is moving up, you're moving up at least 66 cents on the contract, which is kind of interesting that, yes, you are $9 in the money. I figured that delta would be a little higher. Gamma here is okay. Your Vega is very high at 42 cents. And you have a 4 cents theta, so you're losing 4 cents a day here. So based on this contract, it really depends on a few things. One, what's your trading plan? Do you want to own shares of NVIDIA? In which case, maybe you hold on to this and maybe you take the assignment, or sorry, you exercise the trade as it goes higher. Because do you want to own shares at 150? What's your cost? This person didn't mention their cost, so I don't know. They could have paid $20 for it. They could have paid $3 for it. I don't really know. So depending on what your cost is, you might be at a point of maybe you want to take profit, maybe you don't, whatever. So bake that into your thought process as well. The other thing is, what's your goal? Some people, which I guess I already said what's your goal, but I mean, what's your goal in sense of what's your goal specifically with this option, where some people don't look at the opportunity that you may have with like a leap. Now, this isn't necessarily a leap, but it is, what is that? 5 months, 6 months out? Half a leap. You can sell options against this and do what's called a poor man's covered call. And that way you can generate income as you wait. So if you paid, $25 for this, let's say you bought it today for $25, you could sell weekly options, at least as long as it's over that strike, Okay, let's not say you bought it at 25 because that's going to complicate things. I want to keep it easy. Let's say you bought it at $10. I will keep it nice and easy. So that means your break even on the trade would be 160. It's your cost plus the strike. So your break even on your 150 calls is 160. You could theoretically go in and look at weekly calls or next week's calls, whatever you want to do. If you're betting on there being short-term bearishness, and sell some of these calls against your long position. So theoretically, you could sell a 160 call today for this week that expires in 3 days and generate $160 right now of income without losing your shirt. If Nvidia pops off to the upside, guess what? You keep your 160 and you broke even on your longer term call, your 150 call, assuming you had a $10 entry, right? And if it goes down, if it closes under 160, you keep the $160 of premium that you generated from selling that call, and you still keep your $150 long call. So there is a way that you could trade this short term where you could use it as an income generating tool. Again, depending on your goals, you can use it as an income generating tool, or you can just stay long and just wait, or sell some, exercise some. It really is hard to say without knowing a little bit more information about this individual, at least what their plan is. But I feel like I laid out a few things for you guys that way you can understand, for those of you that are watching, just listening, trying to pick up bits and pieces here. You can at least understand when you have these longer term options that are in the money, what sort of things you can do. So to reiterate, save some to exercise. Obviously take profit. You could sell them, right? If you're buy to open, you just sell them. Or you sell shorter term calls against that. The caveat is just make sure the shorter term calls you sell are over your break even. So again, if you bought Nvidia today at 150, you bought this 150 call, this exact call, your break even is going to be whatever that is, $175.73. So you would have to sell a 176 call to make sure that your butt's totally covered on that trade. Meaning, if it gets called away, you would still keep, you wouldn't lose money theoretically. If you sell underneath that strike, then you may lose money. So hopefully that makes sense. Hopefully that helps you out. Next question. I've noticed it seems a bit harder to trade recently. Is there any reason for this to happen? Pretty vague, but let's go into it. So you may be feeling a harder time trading right now, which is interesting because the market's at all-time high. So I'm guessing that's where this confusion is coming from. Like, if the market is so bullish, why does it seem harder to trade? And I would reckon this to be a lot of the summer blues, where volume in the summer tends to tick down in general, and price action tends to be a little less exciting, easy to read. I don't really know the words, but that's summer being summer. So my suggestion on what you should consider if you're feeling that way, and you're someone, and I'm guessing this person is someone who trades weekly options, like they more short-term trade, maybe consider getting a little bit more time on your options and giving yourself a little bit more flexibility. It's ironic because I actually talked about this in our morning thoughts. I have a little voice message I send out to members of our Discord community. And I actually talked about this specific thing this morning, where summertime is a really good time to buy more time because a lot of the moves tend to happen overnight and then have a continuation into the day. So you might feel like you're falling behind. Case in point, look at Soundhound. Soundhound yesterday, still had an okay day. I think it was like 2%, something like that yesterday. So still a decent day. But today, and the overnight session, which we'll do the 1 hour, closed around 11:45. The overnight session in the pre-market got you all the way to 12:32, and now you're all the way at 13:38. So yeah, you could have got in at the open, like, of course, and still made money here. But the thought process is look for these setups where you can make a little bit more money, not necessarily longer term, but having that exposure without worrying about strictly the day-to-day. Because what I've noticed, at least in my personal opinion, through August specifically, and it tends to be the end of July I start to notice it, so it would be a little early for it to happen now, but I guess some people might be feeling this way. You start to see the shift towards the end of July where a lot of these moves, like I said, are happening overnight, which isn't uncommon in general. A lot of moves on the market tend to happen overnight, but specifically with, I guess, people feeling this way, right? I would heavily suggest you consider buying contracts with a little bit more time, offering yourself the flexibility. And if you can't afford them, so let's just say you have $100, right? And a weekly call on SoundHound ended up being, $50. Oh, I can buy two, but next week's call for whatever reason ends up being $3, right? It's just way too much. Either you do one of two things. You don't take the trade at all because guess what? It's too much leverage for you. It's too much. It costs too much. You can't afford it. Meaning you're going to have to over leverage your portfolio. You're going to take on too much risk. Or you make it a spread. You can make a call debit spread, a put credit spread, whatever. It doesn't matter. You can make it a spread to reduce your cost basis and still give you exposure to the upside. On top of that, with a spread, you're reducing the impact of theta. So if you're one of these people who trade shorter term contracts and you're like, oh, I hate theta. Oh, goo, I just lose money overnight. Oh, consider a spread. Your theta's cut in half. Yes, you do cap the total maximum money you make, but like I just spoke about in this program earlier, you are limiting yourself by greed. The only way you lose at this game is being too greedy, genuinely, and just being foolish and not caring. But if you're too greedy, that will kill you 9 times out of 10. I don't care how many algorithms you have. I don't care how many Discord rooms you pay for, how much TA you learned. I don't care. When it comes to clicking the buy and the sell button, if you are too greedy, you will die. And that's a hard lesson. It took me 5 years to learn. Okay? And it goes against human nature, right? You want to make more money as quickly as possible, but that greed will kill you. We talked about this earlier. Focus on making that managed risk. Take more time in your trades, and if you take more time, I am willing to bet you'll have a higher success rate, especially in this environment, and even possibly make larger gains. I mean, look at the SoundHound $12 call. I alerted this yesterday around 53 cents, 52, 51, whatever it was. It's now up, what is that, 200%, something like that? Over 200%, right? And the whole chain's blown up, so it's hard to give an example. But had I taken the $12 call from yesterday, it's up 400% from the close. So yes, it's up even more, but guess what? That SoundHound could drop later, and I will have more value on my $12 calls for next week than these $12 weeklies, assuming I didn't take profit, right? And I have more flexibility. What if I got in on SoundHound like I did yesterday, and this thing blows through $13.99, but it takes until next Monday to get there? Guess what? Those $12 calls for this week, they're kaput. I already made my money, or I had to roll out, whatever happens, but I still have that next week exposure on top of that. Alter how you're thinking. If you're feeling trading's hard right now, you're more than likely just having a little bit of a rough time understanding certain things. And with that being said, I'm going to trim some of the SoundHound because this is going nutty. 232% gain on that. I'm not even in runners yet. My next trim will be runners. Next trim, runners. Boom. Solid trade. Nigam says, I'd love to trade spreads and cash secure puts. I think it's extremely difficult to trade daily spreads at the moment because of Trump. I will dispute, or I will not dispute, I'll debate you on that. I don't think it's hard. So look at how you phrase that. You said it's hard to do spreads because of Trump. Now, if you're saying daily spreads, I'm wondering if you're meaning 0 DT, which is a different story. Because that could be different risk, obviously. But with your normal spreads, just doing spread for weekly, next week, 2 weeks, however far out, right? You're just limiting your risk. So regardless of if, let's say you do a $1 spread and you get in at 50 cents. The most you could lose is 50 cents. The most you can make is 50 cents. If you get in at 25 cents, the most you could lose is 25 cents. The most you can make is 75 cents. So your risk to reward can adjust there. What I would suggest you consider is looking at playing around with the risk to reward. Because sometimes I shouldn't say never. I very, very rarely open a spread sub 50 cents if it's a debit spread. Very rarely. Mainly due to the fact that I always want to be at least 1-to-1 on my risk to reward. And assuming a dollar spread here, I'm saying. I want to at least be 1-to-1 on my risk to reward. So I tend to try to shoot for 40 cents or even cheaper, depending on how aggressive I want to be. Because then my risk to reward it's in my favor. The most that spread can make is $1. If I get in at 30 cents, now I have a 2-to-1 risk to reward, or 3-to-1 technically. If I get in at 25 cents, a 4-to-1. If I get in at 10 cents, I have a 10-to-1 risk to reward. I can only lose 10 cents. Most I can make is 90 cents on the spread. So I would challenge you to look at different ways in which you can structure those spreads, because there's going to always be a way to make money. It's just how you have it set up could be what is making you feel that way, right? Yeah, I would take that to heart. Cash secured puts are I do the wheel. So in our Discord community, we have a wheel channel where I wheel stocks. I will never sell a cash secured put on a company I don't want to own at a price I don't want to own it. Never, never, ever, ever. If you are selling cash secured puts, the only way you will, in my opinion, be longer term successful is selling those on a company you like at a price you like it at. If you don't do those two things, you're probably going to have a hard and a bad time. Yes, ZeroDT, I love doing them. SPY, QQQ, extremely volatile. Check out longer date spreads. Right. Yeah. So I like doing the ZeroDT ones too. But again, keep in mind your risk to reward there when you're messing around with a spread. It can be very, and this goes for everyone. When you're messing around, especially with a ZeroDT spread, for some reason we look at these spreads and we go, like let's say you take a $1 spread on SPY and you get in at 50 cents, or let's say you get in at 25 cents. For some reason, when it moves 25 to 50 cents, your broker might say, oh, it's only a 20% gain or 30% gain. Don't think of it that way. You have to look at it from a point of max profit. That spread can only be worth $1 if you're assuming a dollar spread. So if you got in at 25 cents and it moves to 50 cents, you made a 100% gain on max profit, right? Because the most it can go to is $1. If you got a 25-cent entry and it moves to 50 cents, that is 100%. Your broker will not reflect that amount because of how a lot of them are structured, unless there's a broker out there that does this correctly. But a lot of the times they will not display it like this, and I think it's kind of like a little bit of a psychological game. When you see it, it just doesn't seem as impactful. So even if, and I'll use 30 cents to make it easy, going from 30 cents to 33 cents, that's still 10%. 33 cents to 39 cents, that's still 30%, right? Of max profit. If you are someone who plays spreads, make sure you keep that in the back of your head, because your broker will not make it seem like that, and you'll probably get a little bit of mind gamey with you. So keep that in the back of your head if you are trading spreads. All right, guys, let's zoom around the market one more time before I let you go. And don't forget, if you haven't already, we've got over 100 people watching right now. Do me a quick favor. If you're enjoying the program, please like, share, subscribe, follow, all that fun stuff. Do me a favor and interact with the stream. It means a whole lot to me. As a reminder, if you haven't already, pop over to the YouTube channel. Make sure you subscribe there. Once we hit 500 subscribers, we'll be doing this every single day. So if you like the content here, you find some value in the content here, and especially if you made some money on SoundHound, make sure you interact with the stream. Let me know. I'd be happy to hear all of your success stories or anything that you've taken of value from this program. Now, SPY, kind of repeating yesterday. We kind of had a nothing burger until I ended the program, and then it kind of melted down. It's kind of doing not much of anything. We're currently under that LOI on QQQ, but not by much. So I just, careful if you're a bear. This could recover and then reverse the upside pretty hard. Could also reject. I know that sounds really foo-roo-y to say it can go either way, but it's kind of where we're sitting right now. It is kind of just wishy-washy. The strength still found in here is in IWM, in my opinion. Holding up the best, kind of making a double bottom on the day, but also making a double top. So very range-bound on IWM in general. Volatility pretty also range-bound, not going much of anywhere. VVIX is moving lower, so that tends to hint on the market sliding down a bit. Nickam says, great call on NVIDIA, quick $150. Love it, my friend. Good for you. NVIDIA did eventually get a pop, a little bit of a pop there to where I wanted it to get to, just shy of that like 150-50 area, and pretty hard reject. So all things considered, and now those contracts are right back at my entry. I mean, I would have taken profit up here, but all things considered, there wasn't too much meat on that bone, unfortunately. I'm happy I walked away with 10%. That was a good trade. Good risk management. Microsoft at the lows, not much going on there. Google just grinding lower, down about percent. Basically making a triple bottom here. I think it's going to sweep that 174.28 key LOI on Google. Watch for a recovery there if you want to consider a long. Apple at that 209 area. Careful on Apple. I feel like I'm the only guy who's like overtly bearish on Apple, and then like I've been pretty bearish, just like shouldn't say bearish. I've been risk off on Apple. It's just not worth it. It just isn't. Unless you're in on a day trade and you got in at the top or got in at the lows, it's just not worth it in my opinion. Amazon is not getting that flat top breakout. However, if you still like that flat top breakout idea, you could consider the AEMA on the daily. Currently, that is 220.28, so a little bit lower here, about $1 lower, for a long. And assuming that level holds with a tight stop underneath it, you could try to play for that flat top breakout. Not sure if that's going to happen. And again, you guys know I'll put my money on the line. Not my kind of trade, but at least giving you something to consider. Tesla's just gapping all over the place. I just won't even touch it. It's not worth it to me. Lower high, lower high, lower high, higher low, higher low. You're forming a little pendant here. If you want to draw the lines, you're going to get a break either way. Overall, though, unfortunately, it's looking like we're going to see another similar day to yesterday. And I don't mean bearish. I mean just the word I use is plotting. It's almost boring, right? Which is the summer feel some of you may be feeling right now, like I talked about earlier. I think we're going to see a plodding, boring day on the market overall. I think if you want to try to day trade today, look for individual names that are hot, that have volume, like SoundHound, where you could day trade, get in and out. Otherwise, I would personally consider staying away from the market, like the indexes. And I'm someone who loves to trade the SPY. I trade it all the time in our community. I don't think I've traded the SPY for quite some time, actually. It's been a little while. I have I have calls on IWM right now, swing calls, that are, I think they're in the money. I think I got 220s. I don't know. I opened those up at like 215, whatever. And those are doing fine. But outside of that, I don't have index exposure really at this point in time. I think you're going to find more opportunity, like I said, and I'll reiterate, in the overnight session on individual names. I think that's where a lot of the value that you could find for your trading will be. So I would heavily suggest you consider looking that kind of way, because I think that's where you're going to find the value, at least with how the market is sitting now. Now, again, if we get down to that 613.23 area, I'm going to get pretty excited, because that is the point in time that I'm going to start going pretty long. Mega long? Pretty long. We're going to have a good time if we hit that 613.23 area. With that being said, guys, I'm going to leave you here. You got everything you need to succeed today, whether it's risk on, risk off. Don't forget, we have a show tomorrow again at 9:15, the last show of the week. We're going to do live trading and raccoon trades tomorrow. So we're going to find some undervalued gems, potentially, something in the trash. I'm going to go digging around in the trash today. We'll find some beat up names, potentially. I'll bring them to you, explain why I might think that they are a good opportunity for you to potentially consider. That'll be tomorrow, along with our live trading and market analysis as per usual. With that being said, guys, some say you'll need an edge to trade. Well, I like to look at things from a different angle, and that's always what you'll get right here on the Atomcash Angle. Have a great rest of your day, and remember, precision beats prediction every damn time. I will see you tomorrow at 9:15.
The time has passed, and that's a wrap. You're on